We're with Patrick Moonen, senior strategist at ING Investment Management. A very good morning to you. My word, it has been a difficult quarter. When you look to the fourth quarter, is it more of the same?
Well, I'm afraid that the near-term prospects for the fourth quarter are not that brilliant, given that markets are still coping with, well, the two main worries being the sovereign debt crisis on one hand and economic growth on the other hand. And I think if you look at the main drivers for the fourth quarter, well, the first one is, of course, the corporate earnings season that will be starting in a couple of weeks' time. And we do fear that, well, corporate earnings outlook will not be very positive.
So that's interesting, isn't it? Because if you take that further, do you actually see more sort of downgrades for corporate debt?
Well, indeed, we think that analysts will continue to revise down their earnings forecast for 2012. And for example, actually, we do estimate negative earnings growth in 2012.
So what are you advising and telling your customers how to protect their portfolio? Is it just really keep into defensive and, I suppose, secondly, decide whether you're a short-term or a long-term investor? Because if you're taking the longer view, then you're probably going to be all right.
Absolutely. I think that in the short term, the two main worries will remain very well present. And we do think that as long as we do not see any progress either on the sovereign debt front or better macroeconomic data, that the best way to defend your portfolio is to stay in defensive sectors.
And
so meaning that...
Sorry to interrupt you. I was going to say, in an investment portfolio, what sort of proportion are we looking at as far as stocks are concerned, bonds, commodities, emerging markets? What's your split?
Well, we are underweight equities. Within equities, we have downgraded emerging markets from an overweight to neutral position. We are very much underweight Europe, and in fact, the only region where we are underweight is Japan. From a sector point of view, well, we are underweight all the cyclical sectors, and we are overweight in telecom, pharma stocks, and consumer staples. So quite defensive positioning for the weeks ahead.
And what about bonds? Because of course that is one of the ultimate defensive positions there can be. Do you agree that they are perhaps a little overbought in the market now? Perhaps a little bit more risk could, dip your toe in at least.
Well, that really depends on your short-term outlook, and I think that as long as the European sovereign crisis will be amongst us, and we think that will be the case for the next couple of weeks, we think that there is no risk that government bond yields, at least in for example, the core Europe, will start to rise in an important way. So we do believe that bonds are still an attractive investment in this uncertain environment.
Yeah, difficult times. Patrick Moonen, senior strategist at ING Investment Management. I'm grateful to you. Thanks for joining us on Bloomberg today.